Guys, listen to this. I was shocked to see people destroying their credit scores just to avoid a $95 fee. Here's the truth. Never cancel your old card. Do a product change instead to keep your credit history alive while killing the annual fee. Today, we expose the bank's business model that wants you to close accounts, why the Apple Card is fundamentally flawed for long-term credit building, and my favorite hack to downgrade expensive cards like Amex Platinum without losing points. In my opinion, the mistake I made was canceling too soon years ago. My favorite feature of this strategy is preserving history while dropping fees. If you don't watch this, you're literally flushing 50 points off your credit score and losing thousands in potential rewards. Let's go. The annual fee trap. Let's be honest. A $550 fee just appeared on your statement. It feels clean. It feels decisive. It feels like you are taking back control. Unfortunately, this feeling of control is an illusion. Canceling your oldest card is like taking a hatchet to the trunk. You lose years of history instantly. FICO says length of credit history is 15% of your score. Your credit utilization ratio, the amount you owe versus the amount you can borrow, is a healthy 25%. Think about this. A 50-point drop isn't just a number on a screen. If you're planning to buy a car or a home in late 2026, that lower score could mean a 1% to 2% higher interest rate. On a $300,000 mortgage, that small cancellation mistake could cost you over $50,000 in extra interest over the life of the loan. In my opinion, paying a $95 fee for one more year is a tiny price to pay to save $50,000. It's about the big picture, not just the annual fee statement in front of you. Pick up the phone and take control. Don't let the bank's default cancellation be your only option. Here's a secret. Sometimes banks are happy when you cancel your card. It sounds crazy, right? New customer, luxury new sign-up bonus, new fees, new opportunities for interest charges. Not all banks are created equal when it comes to product changes. American Express is the king of premium fees but strict with product changes. You can typically only product change within the same family. Furthermore, Amex has a once-per-lifetime rule for welcome bonuses on most cards. If you product change into a card, you may become ineligible for its bonus later. Chase is generally much more flexible and customer-friendly. One of the easiest issuers for product changes. Citibank falls somewhere in the middle. Solid downgrade paths, but rules change more often. Finally, the Apple Card, issued by Goldman Sachs, is a different beast. As a single product offering, there is no family of cards to change to. You cannot downgrade your Apple Card because there is nothing to downgrade to. This lack of flexibility makes it a poor choice for a long-term anchor credit account. Let's dive deeper into why I recommend Chase for long-term flexibility. Chase allows you to move between the Sapphire and Freedom families relatively easily, as long as you've held the card for at least 12 months. This is a game changer. However, Amex is much more rigid. My favorite feature of Chase is the ability to downgrade to a no-fee card, and then upgrade back later when a big trip is coming up. Amex often blocks this path or denies you a future bonus on that card. Understanding these specific 2026 rules is what separates a beginner from an elite card player. One huge worry people have during a product change is, will I lose my high credit limit? In my opinion, this is the most critical question to ask the agent. Most major issuers like Chase or Amex will preserve your exact credit line when you downgrade. Why does this matter? Because a high limit on a no-fee card keeps your utilization low forever. However, be careful. If you've been inactive for months, the bank might try to slash your limit during the transition. My favorite feature of this hack is confirming the limit first. If they say the limit will drop significantly, hang up and try another day. Your credit limit is your financial power. Don't trade it for a lower fee without a fight. Each requires a different strategy to keep your history while ditching the fee. Before you even ask for a product change, ask if there are any retention offers available. I was shocked when I called last month and was offered 30,000 points just to keep my card open for another 6 months. That basically pays for the annual fee. Banks have a specific customer lifetime value metric in their system. If you spend consistently and pay on time, they will fight to keep you. Always check for a retention offer first. If they say no, then proceed with the product change script I'm about to show you. I'm considering closing my account because of the annual fee, and I'd like to speak with someone in the retention department. Hi, the annual fee on my current card name just posted, and it's no longer a good fit for my spending. I've been a loyal customer for X years, and I want to keep my account open. Can you please help me product change to the target card name? We share elite money hacks every Thursday. If you don't subscribe to CardVantage, you're losing approximately 3% in optimization every year, which is over $300 in lost value. Stop the leak. Subscribe now. A high limit lowers utilization, a major FICO factor. I would like to proceed with the product change. Before we finalize it, can you please move $15,000 of the credit limit from my Sapphire Reserve account over to my Freedom Flex account? Not all banks allow this, but many do, including Chase, sometimes Citi. Always ask. One final warning on credit line transfers. Always ensure the transfer happens before the account is officially closed or changed. Some bank systems lock your ability to move limits once a product change is in progress. Tell the agent clearly, I want to move my credit limit first and then finalize the downgrade. This simple sequence ensures your utilization stays low and your score stays high. Hang up and call again. HUCA. Rep quality varies. Escalate if needed. Then pivot. Are there any retention offers to help offset the fee this year? A good offer can make it worth keeping the card another year. Then try product change again in 12 months. This is how you turn a potential liability into a strategic advantage for your financial health. Pick up the phone, execute, and keep your financial future bright. The power is in your hands. One final expert tip. Set a calendar reminder for 11 months after you open any premium card. This gives you a 30-day window to negotiate a retention offer or plan your product change before the next annual fee hits your statement. In my opinion, being proactive is the difference between keeping your money and giving it back to the bank. Don't wait for the fee to appear. Act early to stay ahead of the game. Wait, here is one critical catch you must know. When you product change into a card, you typically forfeit the ability to earn a sign-up bonus on that specific card for several years. For example, if you downgrade a Sapphire Reserve to a Freedom Flex, you won't get that $200 bonus for the Flex. In my opinion, it's still worth it to save your credit score. But you should always calculate if the points you're missing are worth more than the points you're saving. Usually, the 50-point credit score protection wins every single time. Cited, FICO, NerdWallet, and 2026 Trending Credit News. This content is for educational purposes only. It is not financial advice. Make decisions based on your own situation and research.